Ladies and gentlemen, welcome to the channel. To my surprise, last night's video got a lot of negative feedback. People are more bearish than I thought right now on Tesla stock. So here in this video, I will go over the ugly truth about Tesla, the good, the bad, the everything. And I feel like I do that in every video, but in this video, I will specifically point out the risks associated with Tesla right now. Because let's face it, since the inauguration, Tesla has not been a good stock. Whereas the S&P has hit new all-time highs, there has been a breadth divergence, you should know. Not all stocks are doing exceptionally well right now. Cyclicals are outperforming defensives. There is a risk-on nature to our markets, but it's not an equal rally. And I think it will be a broader market rally as we do see the improvement, as we do see inflation come down, as we do see the Fed cut rates and the economy hold up. But for now, a stock like Tesla's not really getting some love here in markets, to say the very least. So we're going to go over everything you need to know in Tesla stock, especially heading into next week's earnings report, because that is going to be critical. And, you know, for how many bears we have right now in Tesla, people that are maybe bullish on Tesla long term, but in the near term kind of bearish, I think the setup actually looks pretty good from a technical basis, right? Just look at this chart. If you were arbitrarily looking at this chart, you would say, that looks pretty good. I mean, you still are in a process of hitting higher lows. Unless we break the 376, 375 level and hit a lower low under that, then you're still in the process of hitting higher lows. So you're still in this uptrend. And just zooming out, it's clear you're still in an uptrend. Now, some people pointed out in the last video that we are below our 20-day moving average at $414 per share. We're above that by give or take $9 or so. Not a huge deal. We're above our 50-day moving average at $391. Things get a little worse if you break below that 50-day moving average. That's where you start to get into a troubling kind of situation. Now, some people are nervous that Elon Musk is going to buy TikTok, and that is going to create this massive sell-off for Tesla. And while that is certainly possible, I mean, depending on the number, the dollar amount of worth of Tesla shares Elon would have to sell, that would be a huge problem. I mean, anywhere from 10 billion to 50 billion would likely be that number. 10 billion is a lot different than 50 billion. Now, we all kind of have some degree of PTSD from the last time Elon sold a lot of shares to buy Twitter. But remember, this whole sell-off was from September 2022 through December of 2022. This was about 3 months of extreme selling. The stock fell about 70% during this time. Okay, about 68% to be exact. But you had a 100% chance of a recession, according to Bloomberg. Tesla was cutting prices aggressively. As a consequence, profitability was deteriorating. And you had Elon selling a bunch of stock to buy Twitter. And people thought Elon wasn't like an active CEO anymore at Twitter. And there was a lot of other nuanced things going on as well. So I don't think we can just look at 2022 and say that's definitively what would happen with Tesla. But some people are nervous about that. Institutional investors are somewhat nervous about that as well. And I mean, for good reason. It wouldn't be a bullish thing for Tesla stock. Some people also point out that Trump is not exactly green energy friendly. And that's what Tesla is. So that could also be affecting the stock. Now, I think that's more of an algorithm kind of thing because you're seeing other green energy stocks not doing as well ever since the inauguration, which actually makes sense to me. And that's something that I have not considered as much. Maybe Tesla is just being grouped in that green energy category and is getting sold off like the rest of the green energy stocks. That actually makes a bit of sense to me. And that's something personally I may have overlooked. I think that's more algorithmic in nature. I don't exactly think people are consciously going out and selling Tesla because Trump's the president. I think if anything, that's bullish for Tesla because we're likely to see slower inflation via less government spending, more rate cuts, which will be positive for Tesla, and hopefully a better business environment with less regulations that allows robotaxis to actually come to operation this year. I mean, take a listen to this clip on CNBC that was posted on Friday. It says options action, bullish bets on Tesla. It's only a minute 46 seconds.
Oh, the action. Hey, Mike.
Hi there. So, yeah, Tesla is implying a move of over 8%. Microsoft implying a move of about 3.6%. Meta, another big one at 7.4%. And Apple's implying a move of about 4%. Now, Tesla, of these four, not only has the highest implied move, but it also traded far and away the highest number of contracts, almost 2.3 million contracts, or about 4% of all U.S. listed stock, ETF, and index options today, calls outpacing puts. And excluding those contracts which did expire today, the busiest call contract were the January 31st weekly 420 calls. Nearly 16,000 of those traded for about $16.25 per contract. Buyers of those calls are obviously expecting some good news after they report.
Yeah. Which of the earnings, Mike, are you watching more closely? Most closely?
Well, for me, it's going to be, it is Tesla, not only because it's the most actively traded, but also, of these four, it's the one whose valuation is, shall we say, the hardest to get your arms around. And so obviously it's more of a sentiment trade. And of course, he's got Trump's ear. But the interesting thing about this is that Trump isn't really supporting the EV trade so much. In fact, he's kind of been pushing back on that a little bit. So I think that's going to be the interesting one to follow.
So based on the option activity that we seen on Friday for January 31st, which is next Friday, around the 420 call, with those contracts, those 16,000 of which being purchased for about $1,600 a piece, puts your break even at $436 for next Friday. So if you want to make money on those options, you need the stock higher than $436 per share. Now, I would argue a lot of that option activity was probably hedge funds and institutions. Those are expensive options, relatively speaking, and we probably didn't see a ton of retail investors buying those, although obviously some retail probably did. A lot of it was likely hedge funds and institutions. Retail tends to go further out on the options chain and go, further out the money, in which you did see about 15,000 for volume at the $500 call. So in fact, there's a lot of people betting that this upcoming week could be positive for Tesla, could be bullish. The positive order value on Friday was 67%. You had 90 different trades from hedge funds and institutions, totaling $87.33 million. Now, the problem is, the risk is, if we get disappointed on Tesla earnings, the earnings call, I shouldn't say earnings, because, even if Tesla misses on auto gross margins, I mean, it's not a huge deal. We've seen Tesla miss on auto gross margins before. The stock's going to go up plus or minus like 2% when the actual numbers come out. The risk would be if Elon were to confirm that he is thinking about buying TikTok, which I don't think he will acknowledge that. But if he does, that's a problem. Or if the robotaxi network gets delayed, if the Model 2 gets delayed, those are issues for Tesla stock. I don't think that is going to happen, but if it does happen, then we find ourselves in a much worse situation. Now, Also in the bear thesis next week is, what if Jerome Powell is really negative? What if Jerome Powell says that he's not going to cave to Trump, he's not going to lower interest rates, that they are definitively on pause, that, maybe Powell even pushes back and says some of the policies that Trump is doing could be inflationary, and they're on the lookout for that. There's that case to be had, because it's not here yet, that Powell could be a big negative next week. And for Tesla, that is very interest rate sensitive, economically sensitive, that could be a negative as well. Okay? There is definitely some things to, be mindful of right now, some potential risk catalyst. But here's the thing I think a lot of people forget. There's always risk catalysts in markets. There's always negative things that you can overanalyze and overfixate on. Okay? Sure. I expected the inauguration rally would include Tesla. Apparently, it has not so far. Tesla stock has been red 4 days in a row, down 0.5%, down 2.11%, down 0.66%, and now down about 1.41%, including another 0.25% Friday in after hours. But is this the start of a larger bear market for Tesla? I personally just don't think so. Jake over here on X, he says that he thinks Tesla's in a very similar pattern to number one and number two here. The breakout that you've seen in 2013 and the breakout that you've seen in 2020, suggesting that Tesla is likely going to rally much further from here, and in all actuality could extend maybe even to $1,000 per share based on what these similar charts look like. StockTwit's sentiment is extremely bearish at 24. I mean, that in and of itself tells you something. Message volume is high at 56 and participation ratio is low at 54. Normally, you want to be buying when sentiment is this low. Even a day ago on Thursday, sentiment was bearish at 25. So sentiment is just getting more bearish and more bearish and more bearish. And I understand why retail is, getting emotional and is getting negative on Tesla. And I mean, you could just see it. Look at the comment section of this video. I'm sure there's going to be a lot of bears in that comment section, saying Tesla is going well into the 300s. And while that is true, I think you're banking on, at that point, a bad news shock on Tesla earnings. And I don't think the robotaxi is being delayed. There's no signs of that. And I don't think the Model 2 is being delayed. I don't think there's any signs of that. If I'm wrong, then sure. Now, Elon buying TikTok is the biggest risk factor right now, I think, for Tesla stock. If it does come out that Elon is going to buy TikTok, which would happen in the next 60 days or so, considering there was only a 75-day extension for TikTok, then I think we'll know in the next 2 months. And that, until Elon confirms or denies it, will be a overhang on the stock. But I don't think we'll, doom the stock for lower prices until then, right? I don't think we're handicapped necessarily to a potential TikTok acquisition. I think if the earnings call is good, Tesla stock can still go higher. But if Elon does have intentions to buy TikTok, we will go lower. The bears will be right. We will go into the mid 300s, possibly as low as 330s, right? That's the last kind of basing out. That's the last level of real consolidation we had with decently high volume. The 330 level would be a good level to find some support at. So that's kind of the bear thesis. That's where some of the bears might be right. That's where I think the bears are wrong here. I just don't see a strong bear thesis. Now, Jerome Powell next week could tell us that, things are not good, that maybe they're going to raise rates or something. The last inflation report was good. The last PPI report was good. PCE will be reported on Friday. And again, with the cutback in government spending that we are currently seeing, I mean, Doge has saved almost $19.3 billion of government spending. That is going to be disinflationary. Okay. Has the Fed considered that? Does the Fed get a little bit more optimistic on the prospects of inflation? Possibly. Wouldn't surprise me. Now, we do have earnings next week. Some people are pointing out that Netflix set the bar really high for the rest of earnings. And to some extent, I think that's true. Apple is going to be a bit of a problem. Everyone on Wall Street is expecting they're going to lower their numbers. Okay. AI is not doing as well at Apple as it is at something like Meta or Tesla. So I think that could be some headline risk. And could that drive down Tesla? Maybe. But Tesla reports on Wednesday before Apple. So as long as, Microsoft and Meta are not negative and Tesla's not negative, then I think we'll do just fine. But that's also another risk. If we go through a headline, kind of correction in the markets, that could also drive down Tesla. I don't think that's going to happen. I truly think we are entering a golden age of investing in our markets. And it's going to take some time for this to become obvious. Obviously, things are not going to happen overnight. But this kind of is eerily similar to what Argentina's president has done. Okay? Cutting government spending, slashing regulation, getting to a budget surplus. Do you know the Argentina stock market was the best performing stock market last year by a long shot? They were up over 170% last year. Like, no one even was close to that performance. A similar setup could come, especially as Wall Street realizes this administration's serious about dealing with the deficit and dealing with inflation. And that's going to drive down what I believe 10-year Treasury yields. And that could fuel a risk-on scenario for markets, and especially would benefit Tesla. So, I think that's something that's largely overlooked as well. The last time we were in a low interest rate environment was years ago for Tesla. What if we could get back to that? How many more Teslas would Tesla sell if the monthly payments were a couple $100 cheaper? Probably a lot, right? Tesla could do some cool financing things as well with interest rates being lower. And that's really the 10-year Treasury yield that determines auto rates. So let me know what you guys think about this down below in the comment section. Would love to get your feedback here. If you are bearish, let me know why. If you're bullish, let me know why. But I think Tesla stock's going higher versus lower. Don't think there's much to suggest, at least from a technical perspective, that we're going much lower. And really, again, if you are betting that Tesla stock goes lower, or you think it's going materially lower into the low 300s, I've heard, into the 200s, I've heard, then I think you're betting on a couple different things happening. Number one, you're betting on a larger sell-off in markets, which that can happen. That happens. And obviously, that's kind of out of Tesla's control. Okay, so I think that is a possibility, right? Corrections happen from time to time. But I think in the near term, you're really betting on a disappointing earnings call, which would be the Model 2 or the Robotaxi being delayed. Optimus, I think, is going to be a positive on the earnings call. We'll talk about that in the next video. So you're betting on a disappointment on the earnings call. You're betting that Elon is going to buy TikTok. If those things happen, then Tesla for sure is likely going into the low 300s. Now, again, I don't think we're going to fall 70% from here. A 70% decline would put you back to about $121 per share. Like, I don't think we can expect a similar 2022 kind of setup, but could a 30% fall from here happen? Yeah, in a bad case scenario, if Model 2's delayed, Robotaxi's delayed, Elon's buying TikTok, yeah, I mean, that's would put you back to about $285 per share. I think that would be a great buying opportunity, but I think the odds of those things happening are low, right? Because I don't think the Model 2 is going to be delayed. I don't think the Robotaxi network is going to be delayed. Possibly, it's possible, but to me, it doesn't look probable. I mean, Phil Duan, the chief software AI engineer, or one of the top engineers at Tesla, said we're about to be shocked with FSD progress here soon. That doesn't scream to me delay of the Robotaxi network. Okay, so I think a lot of the bearish sentiment just has to do with Tesla being red when the markets have been hitting new all-time highs. Even though we haven't fallen a lot, I think it's getting to some people. But I don't think now is the time to get bearish, in my personal opinion. I think that actually sets us up well for next week's earnings. And we'll talk about that in the next video. So let me know what you guys think about this down below in the comments section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.